Okay. Thank you. Thank you. And don't go away. We've got a few more really exciting, interesting things coming up. By the way, access to the news release that Paul was referring to about digital measurement, reporting, and verification, you can access that on the QR code. So next, ensuring a resilient financial system. Of course, we're getting close to the end, but we do have another great panel. Wee Kito, Anthony Moro, Heidi Pease, Jared Gdanski, and Lynne Marlor will discuss strategies for a resilient financial system.
Just waiting for the screen.
Right.
Good.
Just as we're supposed to.
Everybody knows their place, right? Thank you all for coming in. Thank you, Sandra, for inviting me, certainly, and thank you for having us on this panel. And thank you, Hogan Levels, for what a terrific day. I think we all learned a lot. And, there was a lot of talk about trust. There was a lot of talk about sort of regulatory environments. I think that you'll learn more today about resilient financial systems and maybe reinventing them or inventing them in a new way. So I'm going to let each of you panelists, if you don't mind, just introducing yourselves quickly. And maybe Jay, I start with you.
Microphone. Hi, Jay Gdanski, founder and CEO of Evertas. We are the first Web3 blockchain and crypto insurance company in the world. We are a Lloyd's cover holder, and we also have a fairly robust security team dealing with asset recovery, incident response analysis, and all that jazz. And we'll be doing some exciting things over the next year that I'm sure you'll be hearing about.
Hi, I'm Heidi Pease. I'm head of investments for Wave Digital Assets. That sounds really loud. So I guess I'm trying to wake you up before we get to the cocktail hour. Thank you so much, GBBC, and all of the sponsors for this annual amazing event where we really bring in such brilliant minds to talk about blockchain and how it can improve the world. That's the reason why I got into blockchain, was really the promise of an improved society. And then I ended up in crypto. And I mentioned that because I am really excited to be a part of this panel. I do believe, crypto has a bad reputation, but I do believe that there's a lot of opportunity, especially as it relates to SDG number 8, which is economic growth and decent work. So I'm really looking forward to speaking. So just really quickly, Wave Digital Assets, we are one of the few post-FTX 100% crypto and digital asset investment advisor, also registered with the SEC. It hasn't been an easy journey, but it has been a longer lasting journey. And I just do have to quickly say that whatever I say here is not necessarily investment advice. It is my personal opinion. But anyway, thank you so much for having me.
Hi, Wiki over here. So I'm I look at business architecture for Onyx Coin Systems from JP Morgan. So Onyx Coin Systems, what we have is actually a blockchain-based payment systems that is 24/7 around the clock. We allow for real-time payments to take place. Previously, I was at the Monetary Authority of Singapore, so have always been looking at digital currencies, CBDCs for the past 7 years or so. Yeah, thank you.
And last but not least, I'm Anthony Moro, CEO of Provenance Blockchain Foundation. We are at Provenance rebuilding the operating system for regulated financial services with a layer 1 sovereign blockchain. It's a public blockchain that is properly permissioned for financial services. Its really only purpose is financial services. You would never try to do anything crypto on the Provenance blockchain, but you would be you could do a lot worse if you built some financial services on the Provenance blockchain. Before that, like Lynne, a long-time Bank of New Yorker, so 20 years at BNY Mellon, crossing paths with Lynne. After that, I ran a REIT and got into blockchain about a year and a half ago after I met Mike Cagney, who's the founder of Figure, who's done some really incredible things on the Provenance blockchain that we'll talk about in a bit.
And so I think, having shared that BNY Mellon stage, we are all very curious about how this resiliency and these new infrastructures will work, since we come from a very regulated industry. And the good news is we don't have to say that all the opinions are my own, right, anymore, right? So many of us know, traditional financial systems are really marked by layers and layers and layers of intermediaries. There's also limited visibility on flow of funds and the activities and transactions behind those flows of funds. And of course, we all know, we've talked a lot about the opportunity or lack thereof for, unbanked, underbanked, or unrepresented populations, right, in financial services. So I think there's really a huge opportunity to rebuild, reinvent, whatever word we want to use, some infrastructures that are very, very resilient and really do address some of the SDG goals, which we're talking about today. Last but not least is the one about, the consumable amounts of energy. Traditional banking also does consume a lot of energy. So, everybody thinks about blockchain as being such an energy hog, if you will. Think about traditional markets where you've got so much paper. I know Anthony and I were talking about that earlier. In any event, so we are going to talk about a couple of the sustainable development goals, number 9, which is industry, innovation, and infrastructure, and number 12, which is responsible consumption and production. And I think those are the best examples, I would say, of how we can align infrastructure innovation to achieve these sustainable benchmarks. The other two, I think, seem like they're already being addressed. One is no poverty. I think we talked about that, or one of the panels talked about that earlier, and decent work and economic growth. So we know that resilient financial structures can really improve or accelerate economic growth. And, we can really hope, I think the promise, as you said, Heidi, of blockchain is really to bring financial inclusion to everyone, and improvements in the traditional financial system so better meet all the global challenges. As we reinvest these foundations so that they accomplish some of these SDG goals, let's talk about financial infrastructure. We could probably talk for days about this, but let's start out with Heidi. I'm going to ask you, and then I'll go through the panelists. What aspects have seen the most innovative solutions as a result of blockchain technology? And maybe while you're at that, if you have a use case, I think that's really where we all learn. So Heidi, I'm going to start with you.
Yes. And actually, I'll just take a really quick step back. I used to work for AIG for about 15 years. I was there during 2008. And right before the financial crisis, I left 2 weeks right before the entire financial fall of AIG at that time. My big takeaway from working with that company, I remember in general in financial services, is that we made huge financial assumptions based on data that wasn't necessarily correct. It was outdated. It was incomplete. And that's part of the reason why I got into blockchain, because I thought, wow, blockchain could have solved and prevented the 2008 recession. And what an amazing technology. I'm still yet to see the tools, and hopefully maybe Wiki, you've got some tools that will help address those. But I am seeing some very unique, exciting innovation that does allow for the democratization of financial access. And I think the very first thing that we forget to mention is just cryptocurrency itself. Bitcoin, ETH, stable coins, and the ability to transmit that cryptocurrency. There's no area code, it's international, there's no market closing. It's near immediate, and there are very, very low transaction fees. That alone is such a remarkable new asset class. And I guess one example that just comes to my mind immediately is some of us in the room, I'm pointing to Sandra, were deeply involved with helping get women out of Afghanistan during the Afghan crisis. And at that time, the banking system pretty much shut down, especially if you were a woman, your bank account was closed. And a lot of these women were the actual breadwinners of their household. They had no money to buy food, to seek medical attention, nothing. And what really became the lifeblood was crypto, was Bitcoin and ETH. So just that alone, in my mind, is such a huge, tremendous innovation, not to mention how funds were raised for Ukraine and went directly to the Ukrainian government and so forth. And then just really quickly, I wanted to tag on there the exchanges that have been built around that, whether they're centralized or decentralized, the ability to quickly move these assets around the world, and also to participate in the building of the network, otherwise known as staking. That is something new that is available to all people, pretty much. You don't have to be a qualified investor to participate in the building of a network. And I know we're going to talk a bit more about DeFi, but DeFi is, I think we're only at about 30 to 40 billion total value locked in the DeFi ecosystem. So we're really in its infancy, but DeFi is, if it's regulated, can be a tremendous tool that allows access to people that are unaccredited investors to participate in the liquidity and the development of an ecosystem, to participate in lending, to participate in building insurance products, to participate in micro lending. So I'm really excited to learn more about DeFi. And then of course, there's a whole bunch of other tools. Maybe we could talk about future stuff like NFTs and DAOs and so forth.
Great. Anthony, I'd love to hear your perspective on that question, financial infrastructure.
Yeah, thanks. So Heidi, you mentioned AIG and the financial crisis, and I fully agree that it could have been mitigated if information flow was better. And one of the things that is happening on the Provenance blockchain is around mortgages and home equity lines of credit, which were among the largest culprits of the global financial crisis. Figure Technologies, who founded the Provenance blockchain, has built a really revolutionary home equity line of credit and mortgage system. And I think they've already, changed how that market operates, for the better to do societal good. And I'll give you an example. So right now, 8 of the top 10 mortgage originators and home equity line of credit originators, Home Point, Movement Mortgage, Guaranteed Rate, and others are using blockchain infrastructure to originate mortgages and home equity lines of credit. Most of the people who are using their systems have no idea, which is great, right? Most of the interface is going to be a Web 2 interface sold by regular salespeople. Maybe they sit in a bank, maybe they sit in an office. But once it's originated, it needs to be ledgered on a blockchain. Once it's ledgered on the blockchain, you can do lots of interesting things with it. Particularly, you can securitize those assets down the road, i.e. sell them to a bank or a third party where it's much more efficient use of capital. And you can take significant time out of the equation. You can build efficiencies and you can take time out of it. When you do that, you disintermediate intermediaries. And so the figure use case has taken, before interest rates rose the way they were, about 117 basis points out of a typical transaction where you originate a loan and then you sell it through an asset-backed ABS security. In the higher interest rate environment, they're taking over 200 basis points out of that. And they've actually done now 3 ABSs, asset-backed securities, led by Goldman Sachs and JP Morgan and Jefferies, taking about 200, as I said, 200 basis points out of the equation. And you can use those 200 basis points or 2% for those of you who aren't, super financial, and you can give that back to borrowers. And that's where we start to do societal good. So you have real-time information, which would help mitigate the financial crisis, and you have significantly cheaper assets that are being sold to institutions and lower rates to homeowners. So I like to say cheaper, faster, and safer is the new operating system for financial services. And it's going to be market by market, case by case, asset by asset. And a couple of them have been done right now, a lot more to go.
So you've given us some really great ideas on the use cases that have been so positive. I'm going to start with you, Anthony. What is probably the least likely to be transformed by blockchain?
So I'd love to see public equities transformed by blockchain, but there's a lot of hindrance in the way because people like their experience. I like my Charles Schwab broker. I don't really care that 7 parties touch my transaction before I settle in 2 days. I mean, I should hate that experience because it really is not 2 days settlement. Nothing settles in 2 days anymore, except for when I buy 100 shares of Amazon, it settles in 2 days. But I could trade with on the blockchain. I could trade with Heidi. We could self-settle, self-clear. I could send her the equivalent amount of money. She could send me her 100 Amazon shares, and we could settle instantly. So DTC goes away. Charles Schwab and Merrill Lynch go away. All the clearing brokers go away. All the reconciliation that we spend so much time with at Bank of New York goes away. And when now you're talking about societal good because it's still the same transaction, but you are removing several intermediaries from the process. Unfortunately, there's a lot of vested interests. Bank of New York makes, this is, I don't work there anymore, so I could say they make $4 billion a year in annual security servicing revenue. There's a lot of vested interests to keep that. So it's going to be a little while before we see that market disrupted.
I guess that doesn't even cover some of the foreign exchange. You look at foreign exchange transactions, days, weeks, months, some longer than that, and the multiple layers, as well as the cha-ching, as I call it, that the opportunistic cost of that, or the opportunity of that. So Heidi, what do you think might be the least likely to be transformed in this?
Well, I work for a SEC registered investment advisor. That just carries a lot of, which I laugh, but we're very thankful to the SEC register. We're very proud of it. But it's an interesting space to be in, because in blockchain, it's sort of our DNA to be anonymous. It's sort of our DNA to be government back off, stay away. This is purely peer-to-peer. And that was what we grew up in the blockchain space. Is we're going to entirely reinvent the financial system. We're going to entirely work outside of government infrastructure. And now that I'm sitting at a registered investment advisor, and I see that there are regulations for a reason, there is AML KYC for a reason, there's onboarding processes for a reason. I just think it's going to take a long time before, I love what you're building, and I look forward to the day that we're able to remove a lot of these middlemen. But from my perspective, it's going to take a long time. I just don't see that there's going to be a lot of regulatory streamlining in the future, and I don't think there should be.
Right. Well, someone said earlier, 8 years. They gave a timeline, 8 years. I would probably agree with that timeline. And I am happy to see that, Sanjeev recently mentioned the article that he wrote, which I think is super helpful. I come from an industry where I covered money service businesses. Can be challenging from the inside, as you know, working at a heavily regulated financial institution. But those are good starting points, right? We do have to adopt them, and they do need to be reinvented, but they're great starting points. So we're going to get onto regulatory a little bit more. What's needed from a regulatory perspective for blockchain to be realized in the financial sector? Jay, I'm going to hand it over to you.
I think in a lot of ways, it's not necessarily the regulations as they exist. I cut my teeth in enterprise blockchain. I also was a Boney alum. And I know. How you manage to find 3 blockchain people from Boney and put them on the same stage is beyond me.
We're everywhere.
Yeah. We're the hand behind the hand, the force behind the force, the face behind the mask. Which actually, if you work in financial services, you get the joke. And if you don't work in financial services, be glad. But a lot of this is decisions, right? So people want to keep on their business. People want to continue to get their cha-ching, right? I remember someone once came in and said, we can cut the cost of wires by blah, blah, blah. And someone said, well, that's great. We can just drop the cost by 90%. We'll still make money. Like it's not a technology issue. The reason why settlement, right, was T3 for so long was that, all the brokers wanted to be able to naked short things and have the ability to kind of go play games without having to have the capital. And I think another part of this is that because everyone's afraid of the regulators, no one wants to change anything, right? So I'll give an example. When I was working at the bank, I was going for some routine medical tests, just normal stuff. And they said, one of the benefits, of course, working in a big corporation, trust me, this is going somewhere. It's not weird. Too weird. Anyway, they have physicians, and they have a lab down there. So I said, can you please send my lab orders so I can go downstairs. I don't have to spend, an hour going to Quest, wait in the waiting room, give my insurance information, leave, and come back and lose half a day of work. I can just spend 15 minutes. They said, wow, that's great. What's your fax number? I said, sorry? They said, well, what's your fax number? I'm like, I don't have a fax. I said, oh, but you said you work in an office. So what's the office fax number? I said, I work for a bank. I'm not having the OCC go through, 7 years of records and seeing my medical tests. That's wrong. It's like, well, I guess we can mail them to you. And so about 2 weeks later, I got them because, of course, I had to go through the hospital's mailing system before it got into the USPS and got to my mailbox. Okay. Well, why did this happen? Well, it happened because of this thing called HIPAA, and people decided that faxing stuff was HIPAA compliant. And so for decades, that's what it was. All right. If you go into the insurance industry, which I'm in, most brokers think that a PDF and WebEx are the state of the art. I mean, it's ridiculous. And so people are sitting there and they're part of it is there are vested financial interests. Part of it is that people are wedded to not change anything. Instead of the regulators doing what they should be doing, which is proactively encouraging innovation in many cases, a lot of times they're blocking it because say, oh, we don't know you, or we don't like you, or we're not sure of your reputation. What you have is you have the same kind of old boys and girls network doing the same old things, collecting the same amount of monies. Some of the things you're talking about were things that I worked on 8 years ago, 9 years ago, and could have been in production probably 8 years ago, and haven't been because everyone's just terrified and scared. And so, we often look at things as technology problems. And really, these are people problems, these are process problems, these are bureaucratic problems. And until people say, hey, we actually want to make a really efficient system, and we're going to go and we're going to deliberately try to get rid of this unnecessary inertia, and we're going to quite frankly start rewarding people for doing things better and punishing people for being the same, okay? When you say no one gets fired for IBM, and you're like, well, guys, guess what? OS2 is done. Other than Model M keyboards, no reason for that. And if you keep on doing it, you're out of a job. Until that attitude changes and you're actually encouraging and pushing innovation, we're doomed. And anyone who's a founder, and there's a bunch of us on the stage here, and there's a bunch of you in the audience knows, the first thing you think about every single day is how am I going out of business? And how do I get there first so I still have a company? And that is not what happens with these captured interests. And until we change that, nothing will change. And it's not really a technology problem. The technology can unlock certain things. We can talk about the cypherpunk movement, blah, 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 blah. But I mean, for core financial infrastructure in particular, that's a decision that has to come from the regulators, from the industry, from lawmakers, and ultimately from the people that elect them.
Thank goodness we had some regulators here today, right? Wiki, I'm going to move to you. What role do standards and regulation play in the development of financial infrastructure using blockchain?
Well, maybe I'll start with the standards part first. I think first is we don't actually have very specific standards in terms of applying blockchain to financial services today. But from a bank's perspective, we are very practical in what we do. Wherever possible, we try to use existing standards wherever possible. And there's a good reason for it, because that's how we can be interoperable in the future when, there are different services provided by different banks, different digital asset company. How do we make it such that we are all able to talk to each other seamlessly? So from a bank's perspective, we look at when it comes to payments information, we use like ISO 20022 MX, for example. That's how we communicate with each other. From a token standard perspective, if it's like a digital token, deposit tokens, or if it's a stablecoin kind of asset, we look at it as using ERC20. But of course, there is still some set of incompatibilities between them. So for example, if you are using ISO 20022 for sending payment messages, typically what you do is you debit one account, credit another account. But what if the underlying tokens itself is recorded in a UTXO or in the token form? How do you actually communicate those set of information? I do think that there are certain gaps in standards today, and there is a role that we have to come together to look at how we can improve the standards so that we can do much better in terms of interoperability in the future. From a regulation perspective, it's very similar as well. As a bank, we try to push the boundary of what we are doing within existing regulatory constraints. So I give you a very good example. So back at JP Morgan, we started with the same blockchain technology, shared ledger technology, of allowing for payments to take place. For a start, we built it as entirely within the JP Morgan environment, because that is what we are able to do. That was 2-3 years ago. That's what regulators are comfortable with. We are slowly pushing it further. What we have today as well is what we call Patio. Is essentially a multi-bank, multilateral platform where essentially multiple banks, JP Morgan, DBS Bank, Standard Chartered are able to come together and record our liability on this shared ledger. That actually allows for participants, banks, people who are transacting on Patio to be able to gain access to different currencies directly and to be able to transact directly with each other. So we talked just now about some of the complexities with cross-border payments today. We are able to actually simplify that by kind of flattening the ledger so that everyone is able to transact directly with each other. We are also looking at what we are called deposit tokens. you can think of it as essentially recording our liability on an external platform. Again, from a regulatory perspective, what are regulators comfortable with? It's always a stepwise measure where we push it a little further, show people that, hey, what we are doing is safe, it's within regulatory, what we are able to do today. Prove that everything that we are doing is safe, people are comfortable with it. Then we again try to then push it a little further. So, sometimes looking outside in, looking at what banks are doing on blockchain, there's a feeling that, oh, the industry is moving very slowly. But there is always, I guess, in a way, a cost to pay, because we want to make sure that whatever we are doing is within what is allowed by regulations today. Some people may think that, hey, why not just not care about regulations? We can bring about much more efficiency in certain things that we do. But if you are just looking at a business case that is based on regulatory arbitrage, the loopholes will be closed very shortly, and you won't have a business case anymore. So I guess that is the bank's approach, where let's look at what we are able to do today. Let's push it a little further. Let's eventually get towards that vision. It may take some time to get there, but we are always progressing towards that.
Anthony, I don't know if you have anything to add or.
Yeah, I think from an institutional and enterprise perspective, JP Morgan is clearly leading the way. Full, hand on heart, JP Morgan is showing every other large bank how to interact with blockchain. JP Coin is revolutionary, I think, internally. And some of the things they're doing with Mass, with what they did with the Project Guardian was also, revolutionary. And I think for the other banks or the other fintechs or the other businesses, they're going to wake up one day and they're going to be disrupted. And they're going to say, why wasn't I involved with blockchain all along? I was resistant to it. I thought my margins were going to decrease. I thought my staff was going to decrease. I wasn't going to have my cushy job. You're going to wake up one day and you're going to be a dinosaur. And I know that for a fact. And in the mortgage business, you're not opening up a mortgage that uses wet ink signatures. I promise you, because no one's going to invest in that business. And what JP is doing across its company is leading the way.
Sorry, this just touches on something that always drove me nuts when I was in the banks, which was you talk to people and say, oh, yeah, we're keeping an eye on that blockchain stuff, and we're going to be a fast follower. And I'm like, yeah, that's not how it works. Fast follower means you're losing, right? That's what it means. I don't want to kind of beat this dead horse here, but like, institutions actually need to actively disrupt themselves. I always describe my time of like, get around and people would say, we have a problem. There's all this new technology. We got to do something. They say, oh, what should we do? What should we do? And I imagine them as as horse and buggy executives, right? And Model T just came out and they're like, wow, that Henry Ford man, he's got that fancy automobile thing. What are we going to do? And they're like, we got the solution. Everyone comes together and they look there and like, it's kind of dark and dramatic and a big kind of silk sheet comes off, there's smoke and it kind of airs. And they say, we now have a powered whip for the carriage. That's kind of the mindset. And it does not work.
It comes down to cheaper, faster, and safer will always win the day in financial services. Eventually, it's not going to be tomorrow. It might not be next week, but it has to win. Full stop.
Right. And, I was on a panel with an asset manager who actually developed a product on chain. And I think the idea, which I want to talk about here, is, the blockchain industry supporting regulators. What is the right process? This particular asset manager worked with the SEC for 2 years to develop a product. Is that what it takes? And maybe Heidi, I'll start with you. How can, blockchain companies in the industry support regulators in the rulemaking process?
We are very motivated and excited to help support government agencies and regulators in the US and around the world by providing our lens of education on what is happening within the digital asset space. It's not good for any of us when there are Ponzi schemes, when there's an FTX, when there's all sorts of criminal elements in crypto. It's just not good. From our own experience, it has not been, I mentioned this before, we are SEC registered, and that has not been an easy road. Whereas a lot of other firms in this space were kind of moving against regulation, we leaned into regulation. And at a time that was almost painful for us when we were not able to work with counterparties that were generating these insane returns. And some of our clients, crypto whales, would say to us, why are you not working with Celsius or Three Arrows or, you name it? And we said, because we're SEC registered, we have guidelines, we have due diligence, we have risk management. And we lost some clients because of that. And obviously now we're thankful because we're post FTX, we're one of the few stronger standing entities in this space. But because of that, we really are motivated to help government agencies. And so we're actually also talking to government agencies that hold digital assets on, now that you've seized those assets, what do you do with them? Are you aware of those assets? Like, what's the difference between a DeFi governance token and an NFT? And what happens if there's an airdrop? And how do you dispose of those assets? Can you dispose of them in the US? Do you have to go back? I mean, there's a lot that we want to help support government agencies. So that's number one. And number two, we are also offering education. And I encourage anyone that is in the ecosystem to knock on the door of your local senator, mayor's office, whatever, to say, let me educate you on how we interact with digital assets so that you have a better understanding of, okay, this is where we're seeing governance tokens being used in DeFi. What are governance tokens? And really help them to understand. We want them to get the bad guy. And one last thing that I'm just going to say about this, I did get into this space because I thought blockchain would help save and improve the world and democratize access to financial services and so forth. It breaks my heart to see how much crypto is used in the criminal world. Any criminal activity you can think of, human trafficking, arms dealing, terrorism, you name it, and the underlying asset is crypto. And it's devastating to see that. So I actually do support our regulators, our law enforcement. I think that they need to have strong guidance and tools to go after the bad guys. And it's our responsibility to help them. And I'm sorry, one other thing, I'm just gonna keep going. The other thing that really angers me is, that we have a bad reputation because our industry has allowed for certain bad actors to exist. It's our fault that we haven't been monitoring. We haven't been using the tools that allow for transparency. And so now we're getting the backlash from that. So it's an onus on us to really help government agencies to better understand what is happening within the ecosystem.
Anthony, you look like you want to say something.
Yeah, I mean, you have to separate blockchain, financial services, blockchain from crypto. What I do on a day-to-day basis, I think what they do at JP Morgan on a day-to-day basis has almost nothing to do with what a Genesis trader or an FTX trader or I don't even know the terminology. I've never invested in crypto in my life, despite being the CEO of a blockchain foundation. It's not my thing. I understand it as an asset class, but I think it's more of an investment in a startup company than it is a currency. I don't like the term currency. So, when people say I'm in crypto, I correct them very quickly. I'm in blockchain financial services, not crypto. And in blockchain financial services, with the exception of how layer ones are regulated, which is a whole nother story, we have the 33 Act, the 34 Act, the 40 Act, we have Reg CF, Reg A+, S1s, we have plenty of regulation to get assets, financial services assets on chain. And many of, Apollo has issued assets on chain. Hamilton Lane has issued assets under the 40 Act, Neuberger Berman under Reg D. I mean, you can get assets on blockchain pretty easily using the existing SEC infrastructure. It's where you try to do things that are not contemplated by the SEC, like have a layer one blockchain with a token that isn't understood by the SEC, and they need to do some work on that, because even if they deemed a blockchain like Provenance as an SEC or required us to register, Ks and Qs, we wouldn't be able to, for reasons that I could take an hour explaining, but won't. They need to tweak those rules a little bit to bring in crypto as an asset class.
We're going to switch a little bit and talk about the sustainable infrastructure. How can blockchain be leveraged to create more sustainable financial infrastructure in the long term? Heidi?
Sure. Well, the first thing that comes to mind, and if you've never been involved with crypto, you might automatically think, know, but is regulated DeFi. You were working on a project. Regulated DeFi is decentralized finance that follows regulation within a certain geographic area or whatnot, but they bring in things like AML, KYC that maybe the old school DeFi rebuted against. But the reason why that comes to mind is we're working on a project right now that is regulated DeFi micro lending to help an individual that might want to, maybe they're already a farmer and they need to invest in some more farm animals or farm tools. This is an ecosystem in which anybody from around the world can provide their crypto, whether it's ETH or whatever, into a liquidity pool. And then that liquidity pool, you're matched up with somebody on the other end that is maybe looking for a loan. And you set your oftentimes you can set your terms on your agreement, but you're supporting the development of a local ecosystem. You can also extrapolate that to, it doesn't have to be micro lending, but it could be startups that are using DeFi. And then also just as far as down the road, it could be things like peer-to-peer mortgage-backed securities. It could be communal insurance plans. There's a lot of opportunity. As I mentioned before, we're only about 30 billion total value locked. And so we're really in our infancy, but there's a tremendous opportunity. You do not have to be an accredited investor. You don't necessarily have to have a credit score. You just have to have collateral. It's anybody from around the world can utilize this. So you are now, as an individual, a non-accredited investor or accredited investor, given an opportunity to participate in a development of an ecosystem.
Jay, did you want to say something?
I think there remains this tension between the regulations that exist in the financial system and what the UN Human Rights Charter, the US Constitution, the social development goals have, right? You're not going to have a KYC AML regimen that also is financially inclusive, because there are large numbers of people who just cannot pass it. You are not going to have privacy and all the things that are underpinned by privacy, whether it's freedom of movement, freedom of religion, freedom of expression, freedom of the press, etc. When you have a financial panopticon, which not only can be abused, but quite frankly, can't even be kept secured in many cases. So if you want to talk about SDGs, there is kind of a breaking point, right? We have a regime, a regulatory regime, particularly around KYC ML, which encompasses what I described it as the 1950s view of the world, right? Like a lot of the stuff that we're dealing with today, we're like, this doesn't work. It's like, well, it made a lot of sense in the 1950s and 60s, but like times they are changing. And people need to think about what it is that we're trying to accomplish with our various financial systems. And the US dollar blows crypto out of the water for every single bad thing that happens in the world. And whether it's human trafficking, arms trafficking, drug stealing, we have a lot of former government people, we have active law enforcement people who work with us. We are absolutely trying to build a more responsible ecosystem. There are a lot of bad people in this ecosystem. There's a lot of bad behavior that happened because of decisions within the ecosystem. Some of it was happened because regulators were too slow on their foot to kind of stop things, and people say, "Oh, I can make billions of dollars and maybe get a civil fine and be a billionaire." As a lawyer friend of mine joked, said, "Well, people who are good and smart and ethical would go and they'd say, 'Oh, lawyer, should I do this?' They said, 'Well, there's risks, you shouldn't do it.' And people who didn't care became billionaires." And so that's kind of a perverse incentive. But ultimately, people get stuck in their administrative and bureaucratic ruts, and they kind of look at if you ever saw the movie Soul, right? The auditor who's sitting there like there's a soul missing. You have to go and sit at what you're trying to achieve, and then you have to prioritize those things. So if you're going to prioritize financial inclusion, if you're going to prioritize privacy, that has implications about regulations. And I can go through dozens of examples, but Sandra will come up here and give me the hook if I don't stop talking.
And I think those are some of the, actual SDG goals that need to be addressed as we move forward. And obviously, we all know it's going to take a while. I want to thank our panelists, Anthony, Wiki, Heidi, and Jay. Thank you very much. Very informative. And thank you, Sandra, GBBC, and Hogan.